Well, we'll make the best of it. Those who can still buy, again, I'm just trying to encourage them to just get into the market because, you know, if property appreciates and you don't own something and you're renting, you're paying somebody else's equity, paying their mortgage down. You're giving somebody else equity that you could have.
That's true. Bob Carr here for another episode of the Bob Carr Show. In the studio today on a return visit is Lisa. Miss Lisa, I'm going to pronounce this wrong, Werre. Lisa Werre. Lisa, we are happy, delighted that you came back to visit us for another episode of the Bob Carr Show. Lisa, what's going on in your world?
Thanks for having me. I'm happy to be here too. Well, we're seeing some changes from the last time that I visited with you. You know, the Fed has started increasing interest rates.
Up.
And that is starting to make it a little bit more difficult for buyers to be able to qualify for the same price range that they were looking in previously. We're up around 7% now. And we could see some further increases before summer of next year. Inventory is getting lower. It's that time of year. People start getting busy with holiday plans. Kids are back in school. Only the serious buyers are left out there looking. And we have fewer transfers into this area for work. So we're just going to see fewer buyers. But the interesting thing is we still have low inventory.
So why do we have fewer people being transferred in?
Well, the military transfers for the jobs that we have in this area, if you're active military, they're called PCS orders. They usually come out in the spring, early spring, and in the fall.
Okay.
And I think most people, typically with kids, try to do their job transfers between springtime and when school starts. Everybody needs an address to register their kids for school.
That's true. So come end of May, 1st of June, I guess people are starting to think about moving or are moving?
Typically, yes. We see the most activity and the highest level of inventory in that April to June timeframe. And we see the lowest level of inventory in the middle of winter, between November and probably February.
That's always been in the last 38 years since you've been in business?
No matter what the market's doing, that has always been the case. That's the one thing you can count on.
So how do you combat that, being successful?
Well, have to get creative. I'm out there trying to get listings whenever possible. Buyers that I'm working with right now, I'm trying to get them off the fence to buy while they can still afford a price range that's within reach.
Let me ask you a question. So you said the interest rates are around 7.
Mm-hmm.
So let's just back up, say 4 or 5 months ago when it was 5.
Mm-hmm.
So when it goes from, say, 5 to 7, it probably takes out 30 or 40% of the market that could have qualified at 5 versus a 7? I mean, there's got to be a big difference, isn't it?
Yeah, well, what happens is people have already seen what they really want at a price range that they could afford when interest rates were at 5 or 5.5%. And if they didn't get off the fence and buy something, or if they couldn't compete and win something back then, which is really most of the time was the case, you're saying, okay, say they qualified for $450,000 at 5%. Now they're going to be paying a lot more in interest, and they might only qualify for $370,000. That's from a single family to a townhouse in a lot of areas, or from a townhouse to a condo. And really, we have rates are coming up, but values are not coming down. I think the Fed was trying to squelch inflation, people spending, which would hopefully bring prices down. But in our market, we really haven't seen that result from the raising of interest rates. We've only seen the people who could just barely afford to get into something to purchase be pushed out of the market now.
I gotcha.
So we kind of have this missing middle piece of people who are working, who can qualify for mortgages, but now can't afford to buy anything.
Wow.
Where are they going to live?
That's a double whammy there.
Right. They can't even go find a rental because those are in light supply as well.
So that's really depressing. If one time you could afford a $500, but you didn't move off the fence at 5%, now you're at 7%, now you're not even in the market anymore, so to speak.
Or you have to settle for something a lot smaller and not quite as attractive as what you really fell in love with at the beginning of the year.
And that's harsh.
Yeah. It's tough for people to do.
I think all of us in life have been through there before. That's not fun.
Well, we'll make the best of it. Those who can still buy, again, I'm just trying to encourage them to just get into the market, because, you know, if property appreciates and you don't own something and you're renting, you're paying somebody else's equity, paying their mortgage down. You're giving somebody else equity that you could have.
That's true.
So just
That's
buy
true.
something, anything, even if it's not the exact dream home that you thought you could get 6 months ago.
But you're at least in the market.
Yeah. We are seeing some other changes in the marketplace. You know, like I said last time, the 50 offers in the first weekend, that's definitely gone. I'm still seeing a few properties selling for slightly above list price, maybe a couple of offers. Usually they're the newer, nicer, completely rehabbed properties that everybody goes after. But we're also seeing price adjustments now in the marketplace. Sellers who listed their properties just slightly above maybe what the price point should have been and didn't get an offer in the first 2 weeks. Some of them are in a panic and they drop the price pretty quickly, and that usually sparks an offer and a contract on the property. But
does it? Mm-hmm. Gets them going.
Yep. We do have a couple properties out there from time to time that really need a lot of work. And in those cases, if buyers are willing to take those on, they don't have to compete so much for those as they did just a few months ago.
Now, do you get folks that want you to list a property and they still think it's 6 months to a year ago and they want top dollar, and you got to try to have a conversation with them to list it correctly? How do you do that with the tact? I know you got the skills, but how do you do that?
Right. Well, those properties, you know, top dollar is really a relative term. I can certainly get them top dollar, but that relates to what have the most recent sales been.
The comps in the area.
And the challenge is a lot of those sellers are thinking back to 6 or 8 months ago at what they could have sold their house for.
Big difference.
And the reality is, if you have a buyer that comes in with a loan, their lender is going to send out an appraiser, and an appraiser can't go back more than 6 months.
Oh, is that the law?
Well, it's not really a law, but that's what the appraisers
typically
have to adhere to.
Oh, okay.
Yeah.
So there's no law about what he or she could do, but that's typical what they do.
Yes.
Okay.
They typically do not go back beyond 6 months. They look for recent sales. So as each house in your neighborhood might sell for slightly less than the last one did, well, you can understand what direction things are going in.
Gotcha.
I don't think we're going to see a major crash. Not at all. I just think it's a softening of the market because, again, we have all-time low inventory.
Gotcha.
Houses are probably sitting on the market on average about 20, 23 days right now. Whereas when we last spoke, I think I probably said around 10 or so days.
I think you did.
On the market. An average days on the market in a balanced market is 3 to 4 months.
Is it?
Yeah. So we're still at low inventory.
I gotcha.
Which keeps the values pretty stable.
I gotcha. But we are in a good area.
Yeah, we have a
area.
lot of employment here. I talk to my clients all the time about being in what I call the Golden Triangle. If you own anything in and around the triangle between Baltimore, Annapolis, and D.C., it's a very good investment place.
That's true.
Definitely.
That's true. So what are you seeing new into 2023 as far as investment in the real estate that you think is going to be good for everybody?
Well, if you're getting ready to list or sell your home, definitely call me early February timeframe. Like to try to get it on the market before March or April when most of the other inventory comes out. There are a lot of benefits to the financial bottom line benefits to the seller by doing that.
I can see that.
And for buyers, if you can't get into something now, don't sign a year's lease. See if you can get a short-term lease wherever you are, or carry it for a month to month, and don't do a year's renewal.
That's smart.
And wait
That's
and see
smart
what,
advice, isn't it?
Yeah, wait and see what the market has to offer in terms of inventory as April and May come around.
I gotcha.
And I don't know about interest rates, no crystal ball here, but if I had to bet, I think they're probably going to go up a little bit more.
A little bit more? Then they'll stabilize and maybe start coming back down?
We hope so.
So, Lisa, when folks want to get a hold of you to sell their home, how do they do that?
All they have to do is reach out to me. I'm with Coldwell Banker, and my direct line is 301-785-4737. A text message is even better, usually gets a more expedient response, but I will get back to them right away. I look forward to meeting you.
Lisa, I appreciate you coming in, spending some time with us today back in the studio.
Thanks, Bob. It's always great to be here and to see you again.
This wraps up another episode of the Bob Carr Show. Stay tuned next week for another episode.